Hi everyone, it's Anne here. Today we're diving into a crucial topic for all investors. How are ETFs and mutual funds taxed? And how can you lower your investment taxes? You work hard for your money, and the last thing you want is to give a huge chunk of it back to the government, right? That's why understanding the tax implications of your investments is crucial. We'll compare ETFs and mutual funds side by side, exploring capital gains tax, dividend tax, and how to keep more of your hard-earned money. Let's get started. Let's start with mutual funds. When you invest in a mutual fund, you're buying a piece of a basket of stocks, bonds, or other assets. These assets generate income as dividends, interest, and capital gains. Dividends are your share of the profits companies pay to shareholders. Interest is earned on bonds held within the fund. These distributions are taxable in the year they are received. Now let's move on to ETFs, or exchange-traded funds. ETFs are similar to mutual funds, holding a basket of assets. However, ETFs trade on stock exchanges like individual stocks. This structure leads to differences in how ETF income is generated and distributed. ETFs have lower turnover varieties, more common meaning fewer taxable events. Now that we've covered mutual fund and ETF income, let's discuss how investments are taxed in Canada. The main types of investment income, interest, dividends, and capital gains, are taxed differently. Interest income is taxed at your regular income tax rate. Dividends receive preferential tax treatment, and you only pay tax on 50% of capital gains. Let's break down each type of investment income. Interest income is taxed at your marginal rate. Dividends benefit from Canada's dividend tax credit. This makes Canadian dividend-paying companies attractive. You pay tax on 50% of capital gains. The rate depends on your income bracket and province. Let's dive into how ETFs are taxed. Selling ETF shares for a profit incurs a capital gain. Only 50% of that gain is taxable. ETFs distribute dividends like mutual funds. Tax treatment of dividends depends on the ETF type and its underlying assets. Now, let's talk about how mutual funds are taxed. Mutual funds distribute income to investors regularly. These distributions can include dividends, interest, and capital gains realized by the fund. These distributions are taxable in the year they are received, even if reinvested back into the fund. We've covered how ETFs and mutual funds are taxed. Now let's talk about keeping more of your hard-earned money. Maximize contributions to registered accounts like TFSAs and RRSP. TFSA contributions aren't tax deductible, but investments grow tax-free and withdrawals aren't taxed. RRSPs offer upfront tax deductions, reducing your taxable income. Now let's move on to advanced tax strategies. One strategy is tax loss harvesting, selling losing investments to offset capital gains. Another strategy is to be mindful of asset location. Holding investments in specific accounts can minimize tax liability. Let's talk about foreign investments and their taxation within an RRSP. When you hold foreign investments in your RRSP, you might face foreign withholding taxes on dividends or interest earned. Canada has tax treaties with many countries that can reduce or eliminate these taxes. It's essential to be aware of the tax implications of holding foreign investments in your RRSP. Similar to RRSPs, holding foreign investments in your TFSA can have tax implications. Unlike RRSPs, foreign withholding taxes on dividends and interest in a TFSA are not recoverable. When investing in foreign assets within your TFSA, consider the impact of foreign withholding taxes on returns. Opting for ETFs or mutual funds focusing on Canadian-listed securities can be tax efficient. So there you have it, everything you need to know about how ETFs and mutual funds are taxed in Canada, and how to keep more of your hard-earned money. Minimizing your tax bill adds extra returns to your portfolio, so use these strategies to your advantage. If you found this video helpful, please give it a thumbs up and hit that subscribe button for more tips. Thanks for watching. See you in the next one.